Hello, friends, and welcome to my YouTube channel Simply Stocks. And today I'm going to talk about endurance tech, which may continue to surge going forward. So let's understand about the company and let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position into any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. Before I talk about endurance tech, here's a small request that kindly support me on Patreon. And once you do that, it will help me grow the channel, help you also ask me questions in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and a number of podcasts that I put up from time to time. For detailed market or company talk or one-on-one discussion you want to have about the stocks you're holding, you can directly email me and we can work things out. Now about the company. Established in 1985, Endurance Tech is into auto components manufacturing, and they most boast of marquee clients both in two-wheelers and four-wheelers. They primarily make braking systems, suspensions, and transmission products. Uh, they have global presence with clients across Europe, and the market cap of the company is around 16,000 crores. If you look at the numbers, then the sales of the company was pretty flat. These are September numbers compared to the last year, so the sales were flat. Profit of 167 crores versus 169 crores, again a flat number. Very low debt. Margins have shrunk over here, but what we are seeing is that there is an auto sector revival that is taking place, and that's why the stock is surging. Very strong combined promoter and institutional holding with only 1.2% free float of the company. So a lot of institutions are invested into endurance tech, and it seems like that the stock may just surge past 1500 once it gets past those levels. There is a lot of demand for such a company because they are into varied segments of auto components. The company is. If you look at the performance, then the stock fell sharply since Jan of 2018. So had fallen around 45% during the Feb March fall alone. So in 1.5 months, it fell something like 45%. Has recovered nearly 100% from those lows. So what we have seen is a complete, you can say, turnaround from those lower levels, and we have seen that there has been a lot of demand at around 750, 800 levels, 700 levels when endurance hit that, and we are seeing the stock now surging at or purged at 1200, 1250 rupees. On a 3-year basis, the company or the stock had done nothing up till September, October, but now the stock has been surging for the last couple of months. So the what I mean to say here is that the company or the stock is not very expensive. Yes, the valuations have become richer compared to what it was in March, have become slightly expensive to what it was in March, but considering the sector, the cycle that the sector is in, I believe that the next couple of years, 3 years, could be very big for the auto industry and auto ancillary, and that's why putting money into endurance would eke out more, you can say, returns going forward. One thing you need to understand that you need to buy on major declines, and I'll discuss about technicals later on in this presentation. But results have remained fine in difficult environments, so you need to understand that whatever results that have come up, although they look flat on a year-on-year basis and there is no growth, but you need to understand that many companies in the automobile sector have gone under. So many unlisted companies have gone under. Many companies have been under so much stress of debt that they have not been able to, you can say, cope up with the current you can conditions. So overall, considering all these things together, I believe that the stock is one of the leaders in its space and will continue to command higher valuations going forward. So numbers are set to improve, and that is what the market is pricing in at the moment. But we don't know how long this could continue, and that's why I would like you to buy on major declines, such stocks on major declines. So why there have been a slowdown? Let's understand that, and then I'll discuss about the technicals of the stock and where you can really buy the stock. So auto industry has been under stress since FY18, and we've seen that happen from December, January of 2018. There have been a slowdown on the ground as well as in stocks, and this shutdown has accelerated the decline, and we saw what happened from Jan Feb of 2020. So over the last 3 years the industry has capitulated altogether, and normally that is what the cycle is, and that is how the auto industry has been working out for the last 20-30 years. 3 years of downturn, 5-6 years of good uptrend in the industry. So it has been 3 years now for the industry to really perform. Although stock prices did go down by Feb March but have recovered very sharply. So stock prices at the moment do not show the whole picture as to where the industry is, but considering the ground situation, it looks like that the industry is now coming back out after a 3 year hiatus. Shutdown, yes, definitely accelerated this decline, and commercial vehicle segment was the most hit, and 30-40% of the business of endurance tech comes from the commercial vehicle segment, and this is going to revive as economy open up. So probably 5-6 months down the line, things would be much better with the vaccine coming out and with things improving on the pandemic front. I believe that maybe 2021 we could see a slight decline in the stock prices, but over a 3 to 4 year period, if you can hold on to the stock for say 23 December or early 2024, this could give you handsome return. Economic slowdown hurt infrastructure to the core, and that hurt the you can say the commercial vehicle segment, and there is projection of further stress at least for the next 1 year, not 2 years, but at least for the next 1 year. But that is where you need to invest. So it might seem that these stocks are right now trading at you can say multi-year highs or yearly highs, but on an overall basis, it looks like that the sector is reviving fast. So sector became out of favor when it looked like in 2019 that there could be a 1.5 year stress to the industry, but now it seems like that the revival is on the anvil. If we look at the technicals, then major long-term support lies around 1050 levels. Currently, the stock is at 1250. What you need to do is either buy the stock around the 200 DMA of 950, 900, or at least closer to 1000 or so. So a 20% decline from current levels would be best, or buy the stock beyond when it goes past 1400 and breaks a you can say major resistance of or resistance zone of 1350 1400. That would be a better thing to do. If you want to invest over a 3-4 year period, wait for declines closer to 1050,000 to buy. Was very weak on charts, but the company has done really well, and now currently perched at 52-week high. Looks like will take out all-time high of 1400 1450 as well. So you need to be careful in investments. What you need to do is wait for major market declines to get into such stocks. So if you have it, hold it for the time being. This will generate a lot of returns for you over a 3-4 year period. Add on massive declines to 1000 as I mentioned, and I think cycle will turn around by the end of next year. So you have ample time to get in. Probably wait for the market to decline a bit and then get into such stocks. It's a good 3-4 year play. No immediate reward is possible, so don't look for you can say a reward over the next 2 months 3 months big returns, and put only 5% of your total investment. So this was my video on endurance tech. Please like and subscribe my channel and hit the bell icon so you can get my videos straight away when I post it. Thanks a lot for watching.